I just had a really great question today in regards to should I pay down discount points on my interest rate? So exactly what is that? Let's say that you have a scenario where your interest rate is 5%. And instead of having 5% interest rate, you want to have a 4% interest rate, which would be 1 discount point. So you can actually give the lender cash. Let's call it, for the sake of this scenario, let's say $5,000. So if you give the lender $5,000 cash up front, you can buy down the discount point of 1%, going from a 5% loan to a 4% loan. And now for the 30-year term of your loan, you have a 4% loan. Why would you do that? Well, for instance, I had a property that I was just working on that's an investment property of mine, and it was going to be a rental. I knew I was going to hold on to this property for 10 years, 15 years, heck, I might even have it for 20 years, right? So the rate that I was quoted was 5.25%. I was like, 5.25%, that's not really what I want. The payment wasn't where I wanted, and because the payment wasn't where I wanted, the cash flow wasn't where I wanted. So the debate for me had to be, well, do I want to fork over that extra cash because I could be using that cash to go buy another rental property? Or do I want to fork over that cash, buy down the discount point, reducing my payment, and increasing my cash flow? For me, because I knew I was holding the property for an extended period of time, I decided to buy down that rate because over the course, when I calculated, over the course of about 3 or 4 years, the amount of money that I'd be saving would then pay back that $5,000 that I put down. And then every year after that, I would have a better cash flow position, therefore making more money along the way. So what does it come down to when you are thinking about buying down your rate, your interest rate, using discount points? It comes down to your situation. It comes down to your cash position and how you feel for your situation. You can best use that cash, whether it's having it in your pocket today or using it towards buying down discount points so that you can reduce your overall monthly payment for the long run. But at the end of the day, what it comes down to is you need to have a plan. And that's what you need to reach out to your real estate agent and talk about. What is my plan? Here's what my strategy is. What do you think the best advice is for buying down discount points? Or do I not do it at all? The one thing I will tell you though, any lender that you're working with is required to talk to you about buying down discount points. And they're especially required that if you have closing costs, which let's say your agent negotiates $10,000 in closing costs, but really you only need $7,000 in closing costs, that additional $3,000 in closing costs can be used to buy down discount points on your behalf. But please know, your lender should not use that money without talking to you first. We've ran into that situation a couple times where lenders just decided to do what they want to do and they buy down that discount point for you instead of maybe allocating those funds someplace else. That should never happen. Any move that a loan officer makes for you, you should be aware of and you should authorize. So if you guys have any questions, hit us up at the Ask Murph Show and we'd love to answer them.